Good evening, this is Martin from Secrets, channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show. We look at what happened in the market during the day and how we can plan for a better trade for the next day. And what was the kind of market today? It was the third day that the index, the Nifty 50, is inside a gap resistance zone, right? And the good news is that the Fyers are buying today also, third or fourth day consecutively, right? So let's get in the charts and see what exactly happened in the markets. Here we have the Nifty 50 charts, and here we have on the right side the Bank Nifty charts. Yes, today also a green close above the previous day highs. Previous day's close is what has happened in the Nifty, and a green close, but definitely below the previous day's high and close is what Bank Nifty has done. Both have formed like a hammer pattern. So, as I said, this is a gap zone. 17,480 is a gap zone, and that is where the consolidation is happening last 3 days, right? And Bank Nifty has given up to 38,000 and closed below that today, right? So tomorrow we have a weekly expiry that is going to happen, and day after tomorrow we have the RBI policy outcome that is going to come. So the market is expected to be jittery for sure. So intraday, this is what happened, right? Choppiness continues. You had a dip and you have a recovery. You had a dip and a almost complete recovery, you can say. So lately the Bank Nifty was not showing that much strength as what the Nifty was showing. So a V-shaped move. Day before yesterday you had a W-shaped move, right? Yesterday we had a W-shaped move. Day before that we had trending move, then W. So it's basically a consolidation after a big rally is what is happening, right? When you have an inside bar that is formed in for the Bank Nifty, when you have an inside gap area consolidation for 3 days, it indicates some breathing space, some pause after a big rally is what exactly is happening. But the bands are rising on, walking on the bands, which indicates bullishness on both indices. Another view is a moving average. All moving averages conquered 20, 30, 50, 100, 200, all no prices much above that, and cleared all the resistance except the last final lap, the final resistance on the Nifty gap resistance at 17,458 kind of levels, right? So that is cleared, means then we are good to go for a continuation of a big rally probably, because that's a major resistance. You have several previous swing highs above that, you can see that, but the major hindrance is the current gap where it is caught up. Whether it will go beyond that and then, or would it make another swing high and then lower low, lower high and then come down, is the question in front of all of us, right? Bank Nifty has cleared all the major gap resistances below. It has cleared even the previous resistance, previous swing highs, and now above you have multiple previous resistance, but it is relatively pattern wise, price pattern wise, it's more cleared all moving averages and major resistance all cleared, but Nifty has one more to go, right? So that's another view. So here it is marked, making out of all these gap resistance numbers. It is marked 1757, 1811, 18100, and 15, 18, 350 downside similarly. So all these markings are that we'll see later in this. Here all these yellows are all gap resistances or support. So right now it's at resistance on at 450 kind of levels, Fibonacci 50. A lot of call writing was seen today at 17,300 and 17,400 also. We look at that in the OI analysis, but the price is saying that the resistance immediately after the gap is 17,500 to 17,600, then 17,800 to 17,850, and then the Fibonacci 60. If you put the Fibonacci extension, you can see that Fibonacci 60 retracement comes at near to 18,000, which is going to be major resistance after the current resistance is cleared. Downside, you have the supports at 7,200, 7,300, then 17,000 rounding number. We have a gap area also, with gap support also is coming there, and then below that 16,800 to 16,900, Fibonacci 38, and it's a gap support zone also, right? As we said, right? So below that you have 17. So all these levels can clearly be seen as supported by gaps. Gaps are very powerful as resistances as well as supports, right? When there is a gap up, a support zone is created. When it breaches a gap, it could again act as a support zone when it retraces back, right? By gaps are very powerful. That's what Nifty has got, plenty of them. 3 supports in the Bank Nifty right side. If you see, it is at a resistance at 38,000, 38,100 zone. That is cleared. Then you have 38,350, 38,650 Fibonacci 50, and there is a previous swing high at 38,759 zone, which is the major resistance immediate to clearing the immediate 38,000, right? 38,759 would be this previous swing high, which is what we have to look at. Then 38,900 to 39,100 is the resistance after that. Below you have supports at 37,700, 37,800 zones, and then 36,900, 37,500 zones, and 36,800 to 37,000, which is Fibonacci 38, as well as a gap support zones also. So other supports can clearly be read from here. Right? Correlate these levels with the expiry day OI analysis levels that you are seeing for the options, and then you can take the trades and derivatives. Moving on, the momentum divergence in the trend, you can see that yes, momentum is bullish and rising in short term, right, on both, and trend is also bullish and rising, clearly bullish, right, clearly in the bullish zone is what momentum and trend is indicating. Volatility has stayed flat, but remember that it had gone up to the 19 levels. So volatility has been spiking up yesterday and day before, but today it has flattened. 17.9 is not that great, right, because it had gone down below 16 levels, but again spiked back, as you can see here, right on this figure. So would it cool off a little bit so that Nifty moves further up, or would it spike back and then bring the index down, is what you have to be cautious about. So any up move towards the 20 zones is danger, and about 20 zones clear sentiment trouble, can be understood from the VIX. Implied volatility is 17.9, right, which is of the Nifty, and implied volatility percentage is still not at the highest level, neither at the lowest levels. It's somewhere in the mid. It's 58, right? 60% percentile is what you can see. Open interest analysis is showing that there is unwind. So tomorrow's expiry, so these levels may be very crucial to understand. There is some unwinding, there is some build-up that is happening on the put side, and some unwinding in far away OTMs. And similarly, so what is projecting out is the resistance zones that you can clearly see, right? And magnitude also resistance zones are projecting out. So there is clearly some resistances that is clear. So what are these resistances can be seen for August 4th expiry to be clear tomorrow. So highest put writing is in at 17,000. Market is much far away from that, but 17,000 is where the highest put writers have put the confidence on, right? So 17,500, so 500 point range, that is where the highest call rating is. So resistance is seen at 17,500. That matches with our study on the price patterns. And 17,200 and 17,600 is where the second level of put writing and call writing support resistance are seen. 37,500 and 38,000, just a 500 points difference. Highest put and call rating is seen on the Bank Nifty. 37,000 and 39,000, the second level of highest put and call rating. 1.08 and 1.19 Bank Nifty and Nifty is the put call ratio, which is clearly bullish. Anything above is bullish. And also futures OI is also short covering and wrong build up in the Nifty and the Bank Nifty respectively, so that is also clearly bullish. So PCR, options OI analysis, futures OI build up, all are clearly bullish. Heat map of today's action is showing that there is a good move except on the HDFC Bank, major indices, Reliance, ICICI Bank, HDFC, and IT stocks all performed. But overall, if you see, it was major movers with the power and the IT sector. Sectoral performance, if you see, IT performed well, 1.5% of up move, and we'll be seeing that, yeah, we can see that there is some reversal that is happening on the IT. So IT is, say, like all the sectors except the pharma is in the bull shorts in the short term. All sectors, the sectors auto and FMCG are the two sectors which are bullish on both time frames, on weekly as well as daily. So clear longs can be taken. Others, medium term is still sideways, and pharma is not bullish yet. So that is how the sectoral analysis. Right now, heavyweights, you can see that HDFC did some move. It's maintaining the bullish short term bullishness. HDFC also at a resistance zone and then maintaining the bullish position short term. Reliance is doing good, and then the camera pattern is there. It's climbed into the bullish zones short term. In IT stocks both performed. You can clearly see that IT is at a resistance zone, Infi is at a resistance zone, and TCS also at a resistance zone. But it is a good reversal that has happened on both. You can clearly see that the price has taken a gone to the support zone of TCS and gone to support zone of Infosys, and then one by one it's clearly taking out. But at a resistance zone is what both IT right now is on the short term. ICICI Bank also performing very good, but it has got immediate all-time high resistance. So you'll be cautious on that. This entire zone is the resistance zone, but moment is clearly bullish, and then it is clear bullishness on trend, and momentum is what you can see. HDFC Kodak Bank has been performing excellent yesterday, but basically it's zigzagging within these two red boxes, which are the zones where it has been doing it since more than 2 years now. So it is now climbed with a range shift in momentum. So there is bullishness there. Probably it can move further up to the previous resistance zone and then start its move down. That is exactly what is happening for that bank. Institutional participation. That's the good news here. So 3 days of consecutive buying with Fyers, which is excellent. Not 3 days actually. The last day of the month, previous month also. So fourth day of consecutive buying by the Fyers is very great news. But small selling by the BIS is there. But institutional participation overall is good. Fyers buying is great news. Spike back of the USD INR currency pair, right? Back to the 79 zones after the dip below the 79 to 78.5 kind of levels. Has shot up, but there is a cool off in the US dollar index also. Right? So overall, some cool off has happened in the dollar. Currency pair, the global markets. If you see, there was a good dip in retracement that has happened, take the momentum down to the support zone of the momentum pull zones, on the edge. That's where the Dow Jones is seen. So it could face some resistance before it can take out this red box resistance zone at 34,000. That is very crucial to move above that. Otherwise it may continue. Basically it is reverse from the edge of a channel and then trying to take out resistance. So that's the same thing what Nasdaq and S&P 500 are also showing. It's in the bullish zones currently, but there is a pullback that has happened yesterday. You have to keep a close watch on that tomorrow morning also. Right? Crude oil is again spiked back after dipping below the 2095 kind of levels, and now it is back to 95.5 kind of levels. Right? So crude oil had cooled off. If you look at from the top of 121, it has cooled off good. As long as it maintains this level, at least it should be fine for the economy and the markets. Gold is spiking back but facing resistance right now. Right? But momentum has gained from the bearish zones. It is reverted. Two actionables: India Hotels, which is a data company, is a rounding pattern breakout. Clear bullish wide range candle is seen. Momentum and trend both are bullish. Can be a long bet for swing trades. Tight stop losses at the entry alert candle is what has to be maintained. GNFC Gujarat Narmada Valley, that company is having this weekly chart. Entry has to be on short term. Just having momentum and trend move. The crossover of the trend has happened. This is a cup and handle breakout. It may be good for a positional trade. Basically, good breakout has happened from the channel. Handle part of the cup is probably what is happening. Right. The longer swing trades it may work out. Definitely till the 9112 previous resistance zone, this breakout may move up to. Is what it looks like, right? Good. So GNFC and India Hotels long positions, two actionables. So to wrap up, the cautious bullishness, what are the reasons? Are obviously, very clear. Momentum trend is bullish. Price patterns are bullish. Support resistance are bullish. Bollinger Band short bullishness. Weeks is less than 20 weeks cool off. If I as a buying, there is very crucial PCR bullish and clear gaps about downside. So it's clearly bullish, but you have to be very cautious because it's at a very final lap resistance of. That's for the Nifty is there. There is some policy update that's on Friday. Tomorrow is an expiry, so all rules may change on expiry days. You know what happens. So for a long-term play on a monthly play, 17 450 clearing is the first hurdle. 38 750 clear second is the first hurdle on the bank Nifty. 17 450 on the Nifty like this. Okay. So volatility and uncertainty is still there. China war, inflation, Fed interest rates, RBI policy, crude, rupee weekend, all these uncertainties are still there. So VIX can spike back and go to the 20 plus again. So you have to be very cautious. Anything can happen. Overnight positions always has to be hedged. Right? Positive factor is that we have done an excellent recovery within a matter of 2 weeks after we dipped. So market is not ready to go below the 15,500, 200, that kind of zones. That's a max. So that may be a bottom end. Maximum it may consolidate, but it's not going to crash down. Is what the power of the retail money to the mutual funds is, and retail money in the domestic institutions is what is showing. So that's a view, cautious bullish view. So if that helps you to frame your view, consider the like button, share to max. We have few subscriptions, appreciate your help. This is our thanks a lot. Happy trading, happy learning. Bye.